Welcome to Trading Lounge and the Australian Report. Look at the ASX and CBA, and in our bullish weekly cycle that we look at, we see that, if the market's bullish, we look for Thursday to be the bearish day, and then Friday and Monday to be the bullish day. So if we see today, Friday, being a bearish day, then we'll know that the bullish trend has changed, and we will need to be on the negative side of things. So keep that in mind. So if Friday is bullish, well then that go in that particular direction and look for the levels and support and those sorts of things. But if it's bearish, then that means the trend has changed and we need to look lower, because we're in a corrective pattern. We're in the sort of middle of a sort of this corrective pattern here. We're in this corrective pattern here, and then we're in this corrective rally here. So we were looking, in a nutshell, at a rally into the box here, and we've got that. And this little move down here, it looks impulsive, but I can count it on the tick chart as being corrective as an ABC, but on the cash market, the physical market, it does count as 5 waves down. So this low here is going to be quite critical as well. So if that's breached there, then we'll be in a bearish mode. But if this is 5 waves down here, right? So it is on the cash market, but on the futures market, it appears to be 3 waves down. Well, then the 61.8% mark would be back up here. So that would be the retest of the 8 here. So that would give us our general, that would, when we're talking about markets and triggers and things, we would look at this as moving down, up, down through here, and then we'd wait for the retest, and we'll put our line under here, and then we'll go short if that was breached. Well, that kind of is that here. But obviously for the day traders, that's a long desert to cross. It's a long way away. So we just need to drill in here and get some understanding with this. So if for whatever reasons, I think it's better to have a strategy in this particular instance for both directions. So we know that if this is breached, then we can go short here. We could also move up into here further as well here, and we'll look at that. So we can draw this line up into here to go short from this point, and we'll look at that in a bit of detail, because it would confirm that it's going to be breached at that point. But we'll look at that in a moment. The other point in the bigger picture here is that from the top here to the low here, the 61.8% will be roughly at the 5.8 here, close enough for us to use this number. So really, if the 5.8 became support, well then we need to be long from that point. So if that became, in this picture here, if this 5.8 became support, then we need to be long, and we'll be looking higher. If this is breached here, well, we can move up and get some more detail on that, and we can look in here to go short here. We could also drill in here as well and have a look at where we could go long from here. We could go long up to the 5.8 and just wait. And if Friday closes strong on the bullish side, well, then we're going to be following through with that, and vice versa. So yeah, look, that's sort of where we're at the moment. I mean, technically now we could actually, if this is the A, the B and the C here, and I'm also looking at this too, especially on CBA, as a series of 1s and 2s in here, and 3s in here, and 4s to pull back, and 5s to move up further. So we need to look at that as well. But if we're just looking at this in plain sight here, then we would look at this as wave 1 down here. So wave 1 here, wave 2 to come back, wave 3 just roughly to the lows here, get some sort of bounce in wave 4, how wave 4's a bit, and then down for wave 5 here. So that's quite possible in that regard as well. So we don't want to miss this third wave here. Okay, that would obviously trigger from here. We could also probably, as I mentioned, we can get that higher here, and we can do all sorts of things to get that in there. So CBA is a little bit the same. Why? I'll just drag it across because I've got the hourly chart here. It's quite possible to have this here as an A and a B and a C waved here. Normally in a correction though, I must say that when we're looking at corrections, you would normally see wave A and then wave B with a bit of sort of, equality in it between wave A here and wave B, and then wave C here. So wave C here and wave A here would normally have some sort of equality as well. But in this case here, and the ASX 200, this move up here is really, it's really got the personality of a third wave. So I'm thinking that this is a fourth wave correction here, and we've got a fifth wave to move up here. So I'm thinking bullish. I know that the US markets are down and the European markets are down, but I still see them as bullish patterns, finishing bullish patterns. So I feel that they should be pushing up on the Friday as well. And Australia can move with those guys, or it can do its own thing. So we really need to take it on its own individual right. So I wouldn't pay too much attention to that scenario. So let's just drill in here for a moment and go into the hourly chart here. So as you may know, we spoke before, we've had this in two particular counts coming up here as a positive count and a bearish count. Yeah, I do think we still need to look at it in both directions. So on this, I can just tidy this up a little bit here. So yes, as I mentioned, the little move down, coming down through here, you know, it looks like a nice 5-wave structure, but on the tick chart, it actually counts as, I'm just going to save that, it counts as 3 waves. Also to here, let's just go from the bottom here to start with, here, and put that in there, so we can look at this first object here. Good to look at the bigger picture here. I know that we could probably nail that as a 61.82 if we moved in. Move this out of the way so I can grab that, move that into there. Then that brings that into that 61.8%, and which is rightfully so as well in its own little way. And we'll put that in here because this is the leg. We can count 1 and 2 and 3 and 4 in here, and then 1, 2, 3, 4, 5 here. So we've got a 5-wave structure here. Okay, so it's fine to do what I just did then to do that, and I would have done that anyway. So let's just move those, keep those a little bit clean. So, and going back up to the upside here, let's just investigate this a little bit here. So we pull this down into that space there, and we can see that, just get a little object in here, so we can see that somewhere in here and here, we've got that that 50%, a 61.8% retracement level. So in my little mind, I think that we'd be going to here. Now, what I do want to see when we get here, though, is like, do we have 3 waves up to here, or do we have 5 waves? Because if we get this 1, 2, 3, 4, 5 that I'm thinking, then we're going to get an A and a B and a C wave back to here, and then we're going to push up again through here. So what we get in this space here is really going to tell us how this is going to play out here. So yeah, in that nutshell there, we can go. Let's just use one of these here. Bit of color coding. So our first instance is, well, let me just copy that there. So we can put that under there, but also this one under here as well. So they're the short side of things, okay? So we can look at, and we'll look at that in a bit more detail here. But it's just good to know where we're going to be bouncing from, you know? So this was our first target area. This was our second here, depending on how you looked at it. And now we're into this one here, and then when we got this one in here, what you can do here is when we get that top in here at 5.8, you can get the 61.8% from this low to this high here, and coming back down here again, and then you could probably lift this up to get a higher short under here. If the 61.8% mark becomes the retested resistance, well then that will be the catalyst to move forward in in that way. So let's just go into the, I think we're working on a 15-minute chart too. We'll just look, same thing here as well. Don't need, nothing's going to help us there. So just go into this tick chart here. So yeah, the thing here is that that I can see from this high here, I've got 1 and 2 and then 3 and 4 and then 5 little waves down here for this structure here. So then I've got, if I use that, then I'd have 1 here, 2 here, and then all of this is 3 here, 4 here, and 5 here. So it's giving me 5 waves in the C wave here. So I can count it as being an ABC correction. So I could count it as wave 4, but I know that it's moved down a little bit, a little bit much for that. So I could also call it wave B as well for the blue one here, as such. I can also see here too that I've got 1, 2, 3, 4, 5 here. So that means that if I've got 5 here, after a correction, I'm going to get another 5. And in this one here, developing here, as I mentioned before, with corrections like wave A and wave C would be roughly the same length. And I can see here that in this structure here, a trend has got a beginning, a middle, and an end. And the beginning is the building process here. And then we're right in the middle now, aren't we? So we've still got to get to the sort of end of that one. So it does appear in my mind that would get 1 and 2 and 3 up here and 4 and 5 up here. Then I can't draw on this side of the pattern here. So if I drew it over here, we would have wave 1 here, wave 2 here. Wave 3 is building in terms of 1, 2, 3, 4, and 5 here. Then wave 4 would come into play, and then wave 5 up here. And then what you got to look at is there will be some sort of ABC correction that we need to pull back into the 61.8% mark. So the first thing to do is to realise if we get 5 waves to that point or a tad above it, and then look for this 50-60% mark here. So that means that we will be working with this number, which is a great number because well, it's quite close to 62 anyway. So, but anyway, you have to gravitate to 60. But this is sort of wave 1 here. So if this becomes the resistance here, then we know that, you know, if it becomes a retested resistance, I can't draw here, then it's a shame I can't draw on that side of the tick chart. It's just a little bit annoying, but let's just, in case you've got to go back and watch the video and so on and so on. So that sort of, it's really sort of, anyway, you get the picture. It's sort of having that there as the resistance at that point. So look for that structure against here. If it's only 3 waves to this point here, then we'll be looking to go short from that point. So then we could look at, also look at, you know, you can get better positions to go short and all the rest of it. So, yeah, don't forget wave 4 tends to break the trend line here, but after wave 4 is done, then you can look at that coming into play there. And of course, the other side here as well is that this is the 61.8% into here. I mean, as I mentioned, when I look at the cash market here, it appears that the move down here is actually in 5 waves, but there is a gap in that, so I can't really nail it down on a 1-minute chart and get that evidence for that there. On the CBA here, if we just have a look at the tick chart, I know that ANZ fell out of bed quite a lot, but CBA kind of held itself, composed itself quite nicely. So on the tick chart here, and look, I mean, I've got it as an ABC, but from the low here, moving up through here, I've been able to count it quite nicely as an impulse wave, you know. So and this counts as an A and a B and a C wave in here as well. Yes, sure, the 38.2% mark may bring us down to, I can't draw on this side, but I can draw on this side. It could move to 81 before moving up here as well. So just be mindful of that there. So because if I count it the way that I've counted it here, and like, you know, from all of this here is the same wave structure here, so it only changes from that point. So I could take it from here, which would give me that 38.2, which would come in at the 81 here, and to cover that gap as well. I wouldn't expect wave 3 gaps to be closed, but wave 4 gaps, yes, thing. But the other point here too, if this market opens positive, then I mean, as it sits now, it can drop to 81 and then move up. If it it moves above 82, or then you can go along from that stage, look for nice support on that level there and move up. But also expect a correction across the 83 here, because in a bit of a nutshell, we're actually looking here at, even though it's working with 82 here, I would still look at this here as the first reaction from here. So when we're looking at reactions like this, then we'll look for 5 waves up, and then we'll look for an ABC here and then up here. So that's kind of what I'm looking for here. Even though I didn't make to 83, I know it's still working with this level here, but I would sort of include this here as part of the first reaction from there. There still will be another reaction when you get there, but yeah, because it's already corrected the trend in a way, it's in the right space. So really, in this case here, yeah, if it moved to 81, then it can move up from that point. If the 81 became the retested resistance, you can trade it down to 80, but there'll be a bounce off 80, of course. And if 80 becomes the retested resistance, then we know that we're in bearish mode from that point there. All right, I'll leave it at that. Thanks very much. Cheers.